Hello everybody, welcome to this market report. My name is Christian Charlo. Today we're Friday, December 5th, 2014. Today folks, I want to make a market report on the week from December 1st to December 5th to see how sectors have reacted. Today the major news that we had is that we had the employment report in the US. The job creation has been the biggest job creation that we have seen in years, but despite this strong number, the strong job report, markets are not making are not taking 200 points and more like we used to have before. If we take a look at the situation here on the S&P 500, we're actually pursuing the rise slightly. Same thing too on the Nasdaq. And the fact that markets are not rising more, I think it's a signal that should tell investors that even if we have strong job report, that the fact that they're not rallying more and taking more points is putting more pressure on the Fed or giving it more reasons to actually hike interest rate in next year. So in 2015, the beginning of 2015 or middle of 2015, we could definitely expect a hike of interest rate, and the Fed will use the fact that we have a strong employment report, companies are continuing to add more jobs into the economy, and this is why we're actually increasing interest rates. So this is one of the reasons why I think the rally has not been as strong. Now, if we make a follow-up on the TSX, what has been the situation there throughout this week? Well, the TSX actually has started a bearish cycle. Compared to the American index, it is lagging its peers. We actually are testing the support here on the TSX. Energy, mining, financial have been the main responsible of that bearish cycle on the TSX. But this point here might be a point where we might have a rebound. If we take a look at the energy sector, it is just following the decrease of oil, especially with Saudi Arabia that again took another measures to continue to keep its oil prices lower in order to keep its market shares in the US. Concerning gold, gold is actually testing its support. I think its gold should be monitored next week, because if ever it goes lower than that support at 114, well then there could be a great opportunity to trade bearish ETF. Concerning those bearish ETF, there's GDST, there's HGD on the TSX. Those represents great alternatives. Concerning the sector, well, it started a bearish cycle, but in terms of new shorting opportunities, we don't find it really interesting. We believe that it's better to trade that bearish cycle with bearish ETF that I've shown you, such as HGD or GDST, simply because if ever the bearish cycle continues, well, the target that we have on the gold sector is around 136 points. So about 10 points potential to be gained. In terms of short opportunities, stocks are not really showing credible selling signals to short. Concerning the financial sector, on the Canadian side, banks have disappointed investors. And I think what we're seeing is that analysts have been too optimistic about banks' earnings. Actually, on marketgurus.tv that you can have access for free for 10 days, we released a board where we show all the banks, all the Canadian banks, show which one missed estimates. Actually, all of them missed estimates. If we take a look at the financial sector here, we have Bank of Montreal that missed estimates. However, they hiked their dividend. TD missed estimates as well. CIBC missed their estimates. National Bank of Canada, they were in line with estimates, but still the stock continued to pursue its decline, and it's actually on the verge of testing an important upward trend. So that doesn't mean at this point that we might not have a rebound in National Bank. I think it's definitely a bank worth to watch for an eventual rebound around $49. On the US side, though, the financial sector has shown a totally different pattern. I think the strong job report has encouraged investors to get into the financial sector in the US, because when people have jobs, well, they're going to consume more. And of course, banks are going to make more money because they're going to loan them some money. So we have JP Morgan that is actually pursuing its rise, Goldman Sachs, Assurant, Bank of America. So all those banks are pursuing their rally though, but in terms of new buying opportunity in the financial sector in the US, there are not. So overall, folks, on the strong job report, American markets have rallied slightly, not enough, which signals that potentially in 2015 that the Fed is going to hike interest rates, because with this low interest environment, the economy is doing pretty well. So I think the Fed might say to themselves that with a higher interest rate, the economy might at least continue to pursue its upward trend. And on the Canadian side, energy, financials have been weak. However, the TSX is testing its support, so which means that On the energy sector, we might see potentially a rebound. Gold has to be watched because gold is testing an important support. Let's say the bearish cycle of the gold sector that started today continues. I think the best alternative to trade that bearish cycle is through bearish ETF, and those are the ones I've shown you, which are HGD and GDST. So folks, that said, see you next week for your market report. Don't forget you can always subscribe also on marketgurus.tv for free for 10 days just by clicking at the link below. And me, I wish you a good weekend and see you next week for your market report.